Welcome there. Thanks for tuning to Opinionated Introverts, where we three discuss, deliberate, and put forth our opinions, our viewpoints, so that our audience can get to know about the particular topic and the particular subject matter and can form their own opinions, their own viewpoint, irrespective of ours. In the due course of time, we'll be hosting some guests who would be students or any expert of a particular subject matter. So, without a further ado, let's start today's discussion. Let's start today's topic. So, our today's topic is financial crisis 2007. So, the first question which arises in everybody's mind, and the basic question is that what is financial crisis? So, financial crisis refers to a significant disruption in the functioning of financial system of a economy of a particular country, characterized by severe disruption in availability of credit, liquidity, which means how much a country has a working capital with them, how much the company has a cash source with them, and the stability of financial institutions. The crisis can may have far-reaching consequences, but not all the time, including economic recession, high unemployment rates, and even social and political instability. There are various causes of financial crisis, and and it is important to know that each cause is unique in its circumstances and its trigger. So there are some common basic causes which I will be saying. So the first is asset price bubble burst. In this, the accumulation level of debt both by individual and institutions can lead to crisis when borrowers unable to meet their obligation. A common example is which we have seen in US in 2008, that is house bubble burst, and which we will be talking more in this video later. The second is excessive debt accumulation. The high level of debt was taken by borrowers who can be individual and both individual and institution. This can also lead to financial crisis as they are unable to meet a repayment obligations. A common example is European crisis in 2009 was caused by excessive borrowing by European countries, especially Germany, and we are seeing today also we are seeing Germany is facing financial crisis after being technological rich. And the third is banking and financial institution failures. Weakness in banking sector can also lead to financial financial system failure. The collapse of Lehman Brothers in 2008 resulted in a severe financial crisis and subsequent global recession. So we have seen that Lehman Brothers in 2000. So this is a example of globally impacted financial crisis. The fourth is currency crisis. A devaluation of your currency and loss in the confidence in currency can lead to a financial crisis. In 1997, the Asian crisis began with the currency crisis in first in Thailand, and which impact two different Asian countries later on. Last but not the least is government policies and regulation. Failure in government's policy, rules and regulation, inadequate regulation can also lead to financial crisis. Saving and loan crisis in the United States during 1980s was caused by weak regulatory oversight and risk lending practices. Uh, Also, there can be also global economic imbalances, but all these causes, it's worth noting that these causes can be interconnected and amplify each other, leading to more severe and prolonged financial crisis. But that doesn't mean only these are the causes which can only happen to financial crisis, can only lead to financial crisis. There can be other multiple factors which can depend from different countries and from different circumstances.
So let's go back in time, more specifically the 20th century, when the humanity faced a most traumatic period, most arduous period. It was the 1930s economic distress. The distress was so long and so big that the economics back then called that particular distress as the Great Economic Depression. It was a massive downturn for the modern industrial economy. As industrial in the sense because the second revolution has just taken place, 1879, and the second industrial revolution was starting to reap its fruits. It wouldn't be incorrect to say that the population back then, the folks back then, were making massive money because of the second industrial revolution, which they hadn't made before the industrial revolution happened. So the disaster was so long, so uh, I mean to say that so huge that it was felt across the length and depth. Depth because it was I have a stats with me, and it was published in an American magazine named as Coal Age. So they published that almost 95% of the US miners were left with no work, as the industries were shut down and the exports were almost zero. This economic distress took major uh, impact on the humanity, as all the fortunes which people have saved or which people were earning were blown off. So, in my opinion, it is an arcane to understand why this all distress happened. It is pretty clear, and in my opinion, it's only one factor which was responsible for this distress, and that is a sharp fall in aggregate demand or spending. The market was thirsty for cash, and I'm I I stress on this point that it was thirsty for cash, as the bank, as all the deposit by the people, the gentry was being withdrawn from the banks. All assets which the population held back then was liquidated, be it stocks, be it bond, or be it property. So that the whole vicious circle was set in place, and hence all human sufferings were being taking place. So we didn't learn much from this crisis. Rather, the greed for money again started. It's been well said by people, and I repronounce it, that समय ही है जो यत्र तत्र सर्वत्र है, means it's only the time which is powerful here, there, and everywhere. So we didn't learn from this distress of 1930s. Rather, the greed for more money, the greed for more resources began, and hence came the financial crisis of 2007 2008, which knocked our doors. So this particular crisis was not much about demand, as we saw in the crisis of 1930s. The aggregate demand was low, so that's why the crisis happened. Rather, this financial crisis of 2007 2008 was much more about greed for more money and greed for more credit if possible. People back then in 2007 wanted lavish lifestyle, lavish homes. So they thought, why not to purchase homes which are out of our reach of income. So if a person had 50 lakh rupees as his or her income, they wanted to buy a house worth rupees 5 crores. So uh, an arrangement was to be done to meet that desire. So they relied, the gentry in US particular, we will be talking of United States about the financial crisis of 2007 2008, because it started from there only. So the gentry relied much more on credit from banks, credit from the retail asset funding authorities. So also it is interesting to note that the banks or the such authorities were interested to give this credit to the people, to the gentry, only because of that they knew that if the prices of housing increased in due course of time, the banks would be massively profitable. So they gave loans. A time came that the banks provided loans to people who wish to buy a house worth rupees 10 crores, and they only have 50 lakhs. So 50 lakhs was given by the buyers as a down payment, and rest amount 9.5 lakh, 5 crore was given by the bank. So banks were only backing on the pure assumption that there would be a rise in prices. But they didn't think of the opposite. What if the prices fell? And so did they. The prices of housing fell massively into back in 2007 2008, and hence all the banks which provided such loans to the people went bankrupt. A name which you would probably hear much in the resources available online would be Lehman Brothers. They also did a similar function. They provided loans. They transferred their particular loans to third party. Then third party transferred their particular loans to fourth party, and it almost kind of reached the stock market, the US stock market, the Wall Street. And hence the Wall Street collapsed, the Wall Street crashed, and all the sort of mishap happened. The outcome was close to 1930s, but it was much larger because with time from 1930s to 2007 we have advanced with time. So this outcome was felt globally, but it's interesting to note that it wasn't felt in India. We would be talking much about that later on. Also, I will be quoting Mr. Warren Buffett on this particular incident. He said that there were more cargoes and less wagon, and hence the train derailed. So the population was much, the house were not that in the US, and hence the train, so-called the US economy, derailed. So almost everything out there was wiped down.
US and abroad looking for a low risk, high return investment started throwing their money at the US housing market. So the investors bought investments called mortgage based securities.
Hmm.
Credit rating agencies were telling investors these mortgage backed securities were safe investments. They gave most of them AAA ratings, the best ratings that exist. Soon lenders
Already.
started giving loans to people with low income called subprime mortgages. After after some years, demand was down and supply was up, and home prices started collapsing. As this was happening, financial institutions stopped buying subprime mortgages, and the subprime lenders were struck by bad loan. AIG, the biggest insurance company in the world at that time, sold credit default sold credit default swaps as insurance against mortgages backed securities. The AIG suffered a loss of $100 billion and was about to bankrupt, but it was bailed out by the US government. Soon in 2008, Lehman Brothers, one of the biggest investment bankers, went bankrupt, leading to global financial crisis, which led to recession, job losses, and increased income inequality in the United States of America. But the impact of this crisis was not severe in India because we were less dependent on exports and more on our domestic sources. But still, the GDP growth fell from 9% in 2007-8 to 7.8% in 2008-9. And our fiscal deficit expanded to 6% from 2.7% in 2007-8. And the Indian rupee depreciated from 39 rupees in 2007 to 50 rupees in 2009.
And also, I think it also not impact India that much because we have the ancestral habit of more saving rather than investing. So we have the more amount in a bank account at that time in 2004 or 5, as the income was also rising.
So based on this discussion, I have jotted down some of my viewpoint as you guys were speaking. Wrote down some of the points or some of the viewpoints which I need to put forth. So Based on this, seeing this trend, be it 1930s or 2007 2008 crisis, or the recently 2020 crisis, though it was not crisis monetarily, it was crisis on medically. So we need a certain degree of risk management. We need to apply a certain degree of risk management, because out there are hundreds of options available to park our funds, park our resources. But it should be our choice. It should be our intellect where to park those funds, where to park those resources. What's the best for our money? So as I speak, there would be an image displayed on would pop up on your screens. So this image is basically made. I made this image so to show that if we have resources stacked together like a dominoes, and if God forbid any unpredictable event hits us, all those resources will be colliding eventually, and there would not be any stoppage. But on the other hand, if we take into account the risk management, we would have certain gap between our parking of the resources, and if then uh, an unprecedented event hits our economy or our country or a global as a whole, then our resources would be saved because we have uh, a sufficient gap between our resources, a sufficient brain has been put behind parking those resources. So it's all important because money is one's blood, sweat, and tears. Earning money isn't easy. It takes lot of it takes out lot of from a person, and hence that income is being generated.
So, with this, we come to the end of our first episode. We will meet soon with more such interesting topics.
Also, I would request you all to not to do that cliche thing of like, share, and subscribe. Rather, we would suggest or we would solicit if you could take out some time from your schedule and write down your thoughts about how we can do better in our journey. Or we have just started our YouTube channel, and if you could just take out time and write suggestions or reviews, whatever whatsoever, we don't mind negative or positive, and you could just write down in the comment section or on our respective LinkedIn IDs with our respective names. We would highly appreciate that. Thank you.
Thank you.
Thank you.